Cryptocurrency is pointing its nose at the economic problems of the United States of America. Welcome to Lynk channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. At this point, digital currencies are powerful enough to affect the job market, housing market, and inflation. Let's take a look at Bloomberg Crypto's tweet. Cryptocurrencies have enough juice now to influence inflation, housing and the labor market. Trib.al/G49row1 via ad opinion. July 20, 2022. The Federal Reserve, economists, and other parties are all perplexed by a number of significant macroeconomic concerns. Why is inflation so high right now? Why are housing prices rising so quickly? And why is it so difficult for companies to hire people? Undoubtedly, some of the responses are reliable. Price increases are unquestionably a result of tight supply, rising consumer demand, and the Russia-Ukraine conflict. Prices are surely rising as a result of tight supply, increasing consumer demand, and the Russia-Ukraine conflict. During the pandemic, there was a pause in new house construction mixed with a surge in suburban demand, which led to a housing scarcity. Additionally, the epidemic made it more difficult for some people to find new employment while encouraging others to retire early. But the questions continue, indicating that there are perhaps other factors at work. Most likely, one of them is a cryptocurrency. It is common knowledge that changes in the willingness and capacity of firms and consumers to spend money have an impact on the economy. To support the U.S. economy during the 2008 financial crisis and once again during the epidemic, the Fed issued trillions of dollars. Additionally, it explains why the Fed is attempting to reduce the money supply in order to curb inflation and expenditure. It makes sense to assume that the most popular cryptocurrencies, like Bitcoin and Ethereum, may affect the economy similarly because they are readily converted into US dollars. For a huge percentage of their brief existence, there was little threat of that. According to cryptocurrency statistics source CoinMarketCap, the worldwide market value of cryptocurrencies was $250 billion in mid-2020, about a decade after Bitcoin's launch. This was a small portion of the $18 trillion circulating at the time, as determined by the so-called M2 supply of money. However, in the months that followed, cryptocurrencies' market value increased substantially, approaching $3 trillion by late 2021. What happened to the economy at the same time? According to the Consumer Price Index, inflation increased by 9.4% between June 2020 and December 2021, which is the greatest over any similar period since the early 1980s. The S&P/Case-Shiller U.S. National Home Price Index increased by 29%, a significant increase beyond any similar period dating back to the index's creation in 1987, including the time leading up to the mid-2000s housing bubble. The number of job opportunities more than doubled from 5.5 million to close to 11.5 million, representing the largest increase in terms of both absolute numbers and percentages since the data series' inception in 2000. The crypto bust then occurred. Since late 2021, cryptocurrencies have lost $2 trillion in market value, with their total market worth falling by two-thirds to around $1 trillion. Although economic data is released with a 1-month or longer lag, there are indications that the labor market, housing market, and inflation may all be slowing down. The price of various CPI components, most notably gasoline, has decreased along with inflation predictions. The rate of increase in housing prices looks to be decreasing, and in certain areas, prices may even be declining. The number of job vacancies fell by 1.7% this year through May, and some firms claim it's getting simpler to recruit employees. Not least because it's difficult to determine how much of the worldwide crypto profits and subsequent losses can be ascribed to Americans. It's not a suggestion that cryptocurrencies are completely or even primarily to blame for these larger economic developments. However, they are a factor, possibly a significant one. 11.6% of first-time homeowners who responded to a Redfin poll around the pinnacle of the cryptocurrency market in December 2021 said that at least some of their down payment came from cryptocurrency earnings. That increased from 4.6% in 2019 to 8.8% in 2020, in line with the astronomical ascent of cryptocurrency throughout that time. Now, let's discuss about cashing in. The proportion of first-time homeowners who claimed digital coins helped with a down payment increased along with the value of cryptocurrencies. It also appears that cryptocurrency gains have a role in the labor shortage. In a study done by consumer data firm Civic Science in October, 11% of participants claimed that cryptocurrency profits had allowed them or a friend to quit their jobs. This percentage is 44% for respondents with annual incomes under $25,000 and a startling 75% for those in the $25,000 to $50,000 income range, which includes individuals in the retail, healthcare, social assistance, travel, and leisure industries. Are some people getting rich? Cryptocurrencies have, at least temporarily, provided some employees financial independence. The fact that having more dollars floating about during economic downturns helps individuals feel wealthier is one reason central banks pump money into the system, which is, unsurprisingly, what the rise in cryptocurrencies actually has done. Investing in cryptocurrencies, according to more than half of study participants from Civic Science, enhanced respondents' personal worth. Over 60% of respondents in the $25,000 to $50,000 group reported that cryptocurrency has increased their wealth, which was the largest percentage. Minting coin. Before the crash, many individuals felt wealthy thanks to cryptocurrencies. If cryptocurrency values continue to decline, we may assume that respondents to future polls will cite lower cryptocurrency prices as a factor in their decision to cut down on spending, return to work, or postpone house purchases. That will be just another hint that cryptocurrencies could be affecting the economy in ways that are significant to economists and the Federal. The potential disruption of central banks' efforts to control inflation and the labor market by cryptocurrencies is one of the early and persistent warnings about them. Most likely, that day has come already. I will now give you a brief update about Cardano. After a bullish breakout, Cardano aims for 70 cents. Upon breaking over a major supply wall, Cardano seems to be moving in the direction of the bulls. Technical indications indicate that Cardano may have the ability to increase in value as long as it trades over 50 cents. Cardano has broken over a crucial point of resistance, possibly indicating the start of a new upswing. Following a 3-month period of stability, the price of Cardano has increased by about 23% during the last 3 days. Shortly after Cardano broke past the 45 cents barrier level, a sharp rise occurred. As the biggest supply hurdle appears to have been broken, more buying pressure might send Cardano to new highs. On its 12-hour chart, Cardano looks to have exited the descending triangle. This technical pattern predicts that after surpassing the 45 cents resistance level, Cardano might increase by as much as 51%. If the formation is accurate, 70 cents is the upside goal. To have a hope of printing greater highs, Cardano must continue to trade above the 50 cent support level. Failure to maintain above such a significant price level may be interpreted as weakness, which would prompt an increase in profit-taking. Cardano might fall to 45 cents or perhaps 38 cents if this were to take place. The current rising price movement is in line with the recent rise Ethereum has seen following weeks of lackluster price movement. As the cryptocurrency market begins to take off, the market value of other Layer 1 networks including Solana, Avalanche, Phantom, and Near has also surged. The future impact of the general macroeconomic malaise that has impacted on risk-taking assets over the past several months on the crypto market is still uncertain. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.